Bitcoin is at 86k and the bearish flag pattern has broken to the downside. Some people are still hopeful for a price recovery and the Santo rally, but I personally still see the market as bearish. Today, let's talk about Bitcoin and the altcoins, especially Ethereum, Solana, and their future outlook in this bearish market, and what price ranges can be expected for them. We clearly got the downside breakout from the bearish flag pattern, as I mentioned in several previous videos. Our next support zone could be around 72k and the maximum 68k. Many people believe that we could be in more expanded range compared to the pre-COVID period, and I agree with them, at least before the start of quantitative easing. If you overlay the chart of the US net liquidity minus USM2 money supply dividing by national debt onto the Bitcoin onto our Bitcoin chart to observe this chart, I add that. Observe the amount of real money outflows, meaning the liquidity that actually circulates among the people. We can see that in the previous cycle, around 2019, slightly before quantitative tightening policies ended, and liquidity has slowly started to trend upward, and trend change divergence form. However, before the start of easing policies, we still continued our overall downtrend. If we measure the correction period in 2019, it lasted 26 weeks, after which we experienced a bull trap right here, a pullback, and then another leg down. If we project the same 25-26 weeks time frame forward to our current situation, we could potentially see a price recovery toward until end of the February or early March. Here, end of February or at the early March, where price may pull back to our trend line, this trend line, then continue to their downward trends. And our bull trap, similar to our previous cycle, formed at the end of the February or early March before further declines, and there is a strong possibility that a similar setup could form again in our current situation. And there is also another possibility that in May, after Jerome Powell is replaced and a new Fed chair closer to Donald Trump takes over, our monetary policy could shift somewhat, and we may start to see a quantitative easing. In that case, we might see the market bottom in the second quarter of next year, in 2026, followed by a period of a sideways price action during the summer, and then a trend reversal beginning around October. Additionally, if we apply Ethereum 2019 candlestick pattern in this situation here to the current chart, I add that before, it points to a support bottom. It's around 2300 to 2400. we could see a price bonus after that from this level towards 3800 and then continue with the further declines. And this candlestick pattern indicates a price floor around 1500 to 1700. There is a possibility that since Ethereum has not experienced a major price expansion to the upside, it may also avoid a much deeper crash, and 1700 could be the final bottom at the end of this bear market. On the total market cap chart, there is a bullish wedge structure that has broken to the downside. This suggests a higher probability of a deeper correction toward $2.6 trillion, which was our previous all-time high resistance and is now acting as a support from there. We could see after that a pullback to our last trend line, potentially reacting around $3.5 trillion, forming a lower high that would confirm the broader downtrend. If we apply a Fibonacci, I add that to our total market, to this bullish leg, the 0.786 Fibonacci level could mark our cycle bottom around $1.5 trillion. And on top of that, if we apply the same Fibonacci analysis to the total 3 market cap, it suggests a cycle low around $478 billion. You might ask why this 0.786 Fibonacci level. The reason is that has historically worked very well in crypto market. As seen in previous cycle, price has often reversed around this level. I've made a video in the past, especially about this Fibonacci level and how Bitcoin has constantly react to at the bottom of each bearish cycle. If we measure price correction on total 3, it comes out to roughly 44% to 50%. Based on this, we should expect our altcoins to experience a correction of a similar magnitude, some slightly more or slightly less. For example, the Solana, if we apply this Fibonacci retracement to our bullish wave, to our recent bullish wave, it points our 0.786 Fibonacci, it points to $68 to $70 zone. If 44% to 50% decline from current levels would also bring price into that same area. In the previous cycle, before the major correction, we saw a small price bonus across Bitcoin and the broader crypto market, and forming a bull trap similar to this area here. If we project that pattern, I add that to our current situation onto the chart, It shows an initial price bottom around $84 to $88, followed by a bonus. Then we will create a lower low and finally further the downside. What makes the Solana different is this one. Is that below $100 there is a particularly no strong support until $61, and even that level is weak and leaving the downside risk toward $26 and even $10. This is something we must seriously consider in our risk management, and we need to be even more disciplined and cautious. If you like this video, please give the video thumbs up and subscribe to the channel. Peace out.